This fund is in second year from inception. It started in February 2024 and delivered an absolute return of 29.38% in its first year of operation, which ended in December 2024. It is now in second year, and for the first half of the year, the fund has delivered actual absolute return of 9.54% for the first half of 2025. Impressive return because the fund targets an absolute return of 20% to their investors. And if you extrapolate the actual performance in the first half of 2025 at 9.54, that would translate close to about 19% by close of 2025 if the same actual performance was to be duplicated in the second half of 2025. The annualized return for 2025 using the actual data for Q1 and Q2 of 2025, this fund has an annualized return of 19.08%. Welcome to a review of Q2 performance for Hawk Special Fund powered by Faida Investment Bank. We'll be looking at the performance in Q2, comparing it with the performance in the first year of operation, that is 2024. We shall also look at the fund details and also an analysis of the performance in Q2 and what a million invested in January 2025 looks like by close of the second quarter of 2025. We shall look at all those schedules after 3 seconds short break, so don't go away. In the meantime, as always, give a like to the video, engage in the comment section, and don't forget to share the video if it has value. See you after 3 seconds short break. Welcome back to our continued review of Q2 performance for Hawks Special Funds. The first schedule we are going to work on is the schedule on fund performance. This schedule gives us the performance in all the quarters from inception of the fund, and from the top we have Q1 in 2024. The fund delivered a 15.40%. Q2 we had 6.78%. Q3 gave us a 3.15%. Q4 giving us a 4.05%. That was the actual absolute performance of this fund in the year 2024. If you sum up those quarterly performance for the whole year, this fund delivered alpha return of 29.38% net of fees in 2024, which was their first year of operation. The Q1 in 2024 is very important in our future analysis because that period covered only 2 months, February and March of 2024, and the fund delivered a 15.40. And it's important we see whether that kind of performance has been duplicated in subsequent quarters. Further down, in 2025 Q1, the fund delivered a 4.66% compared to Q1 in 2024, which the fund delivered a 15.40. We shall be looking at those changes and their effect in one of our next schedules. Q2 of 2025, which is the quarter under review, the fund has delivered an absolute return of 4.88%. Month by month performance, because for this fund, Hawk Special Fund, the fund compounds your interest or compounds your investment on a monthly basis. What that means is that the fund calculates interest or returns to investors every month, and the interest or the return that is paid out to your capital is combined with the opening balance for every other month to form the new capital reinvested in the second month. And for that reason, the frequency for compounding in this fund is higher compared to Manza X in terms of period or the number of times interest is calculated and reinvested. This one giving us 12 times in a year, Manza X giving us 4 times in a year because Manza compounds on quarterly basis. And therefore, for Hawk Special Fund, the monthly performance is very important for your calculation or analysis. And therefore, in January 2025, the fund delivered a 1.60%. February, the fund paid out a 1.76%. In March, we had 1.30%, April 1.66%, May 1.53%, and June 1.69%. That total, if you sum up all those monthly returns, you get a total of 9.54%. The same if you take Q1 2025 and Q2 2025, put them together, combine them, you still get the same value because the 6 months, that gives us the first half of the year, which translates into 2 quarters, Q1 and Q2. So whichever method or whichever route you take to determine what was the performance for first half, that is H1, it's supposed to be a combination. Either you will get the sum total of the 6 months performance or the total of the Q1 and Q2 performance, which will give you the same value, that is 9.54%. So what will be the picture, or what will the performance look like, assuming that that performance depicted in the first half will be duplicated in the second half? That is what now we call the annualized rate. The annualized rate is not the actual rate, but is a projection of the performance using the current data. So using that figure 9.54, because it reflects the first quarter performance, which is actual, assuming the same will be duplicated in the second quarter, then these funds annualized will give us a value of about 19.08%. Compare that annualized rate and the target rate. The fund is targeting to give an absolute return of 20%. And remember, that is a target, not a guaranteed return. So the annualized rate and the target return are so close. So the fund is still performing well. This is our second schedule and its analysis of the figures that we have highlighted in our first schedule. A closer look into the picture of that performance comparatively. We have taken the figures of performance for year 2024 and we are comparing them side to side with the figures in 2025, and we are looking at the changes, whether it's a positive change or a negative change. And this schedule will be having a similar schedule for the next quarters until the close of the year. Q1 of 2024 with a 15.4% compared with Q1 of 2025 at 4.66%, there is a decline in performance amounting to a 10.74%. The fund did not duplicate or get a performance in the first quarter 2025. The performance that was in the first quarter of 2024 was not duplicated in Q1 of 2025. Q2 of 2024 delivered a 6.78%, while Q2 2025 has delivered a 4.88%, and comparatively, there was a reduction in performance for Q1 2025 compared with the Q1 of 2024 by a tune of 1.9%. And that consequently has led to a net reduction in performance of the first half of 2025 compared on the performance of the first half of 2024, where in 2024 H1 we had a 22.18%, and in H1 of 2025 having a 9.54%, that gives us a reduction by 12.64%. Therefore, the full year performance in 2024, the fund delivered at 29.38%, while in 2025 the projected full year performance of 19.08%. If you get an average quarterly performance, the average performance per quarter, you are getting a value of 6.49%, and the average annual performance of 24.23%. You may be tempted to think that this is a bad performance or a poor performance because of the negative changes. But this being a new fund in the market, always majority of neo funds will give an high performance in their first year of operation or in the early years of operation before they stabilize, because the fund that is being managed, the asset under management is small, giving a huge option and flexibility to the fund manager. In 2024, by close of the year, the OC Special Fund, attained about 2 billion worth of assets under management, and by close of Q2 of 2025, the fund grew more than 100% to a 5.75 billion. That expansion, that growth would also feature mostly by a reduction in performance. And therefore, the figures posted in Q2 are a good performance when we compare with similar special funds in the market. And the closest fund that you can compare with this OC special fund is the Manza X special fund. And comparing the actual performance in Q2 and Q1 of 2025, these two performances are on a neck-to-neck competition in terms of their returns. In our third schedule, we are looking at an investment of 1 million done in January 2025. What this investor has accumulated or attained by the expiry of the first half of the year, or by maturity of the locking period, because this fund, just like Manza X, give us a locking period of 6 months. And therefore, an investment of 1 million in January, beginning of the year, the fund giving us in the first quarter a 4.66%, which translated to a total of 46,600 shillings. That gave us a closing balance in the first quarter of 1,046,600 shillings. The closing balance of the first quarter is the opening balance for investment in the second quarter. And therefore, that is what was reinvested in the second quarter beginning. And therefore, by close of that second quarter, return for the second quarter, I'm at 4.88%, was 57,074 shillings and 8 cents. That gave us a new closing balance in the second quarter of 1 million shillings, 97,674 shillings and 8 cents. Then I have a value at the bottom of an adjustment, because I've used my computation, I've computed compounding on a quarterly basis. This fund is compounding on a monthly basis. Therefore, the adjustment is an analysis of the compounded return from January to June. That 9,488.13 is what was earned extra because of additional frequency of compounding in OC Special Fund, compared to a similar million shillings invested in Manza X Special Fund. In our next video, we will be comparing the two funds in terms of performance, but because this schedule was initially done preparing for that video, that's why it came. We did compounding on quarterly basis, and we brought in that adjustment to reflect the actual value in computation for the special fund, for OC Special Fund, for a million invested in January. And therefore, this schedule, which is an extract from OC Special Fund fact sheet, that's why we have a delivery that a million invested in January 2025 in OC Special Fund delivered 1,107,162 shillings and 21 cents. Then lastly, but very important, we'll be looking at the fund overview for those who are hearing about OC Special Fund for the first time. The base currency for the fund is Kenya shillings, meaning that this fund will invest in different currencies in different markets, because the fund manager has a wide scope to diversify the investment in the local markets, regional markets, and global markets, meaning that there are investments that will be using different currencies, but after all those investment mature and returns are paid, the fund distributes the return to investors in the base currency, that is Kenya shillings, and the fund is domiciled in Kenya. The minimum investment for this fund is 500,000 and minimum top-ups of 50,000. Very important. The minimum investment being 500,000. The top-ups are not mandatory to be done on a monthly basis. The top-ups, you make your top-ups or additional investments when you have enough funds available at a minimum of 50,000. However, for this fund, with a locking period of 6 months, Hawk Special Fund applies the locking period to every investment, to every deposit that you make in the fund. Withdrawal fees are zero. The fund does not charge liquidation fees. There is a management fee of 6%. This fee is not charged on your capital because there are no entry charges. The 6% applies at the end of each day because the management fees is prorated over 365 days, and therefore it is a deduction from the returns that are made from the fund. So you get the fund return less the management fee to get the investor return. The other item that is very important is the benchmark. This fund does not benchmark on the target rate. The fund benchmarks on the average performance, which is spread over its asset under management, where 30% is benchmarked on a 364-day treasury bill, a 1-year treasury bill. A 30% portion will be benchmarked on the Nairobi Stock Exchange All Share Index, and 40% of the fund will be benchmarked on the S&P 500 performance. The total asset under management so far, by close of Q2 2025, this fund has managed to mop a total of 5.75 billion from the market for it to invest on behalf of retail investors. The fund manager, in this case, the fund manager is Faida Investment Bank, but the lead fund officer is Ian Kaangara. He has over 17 years of relevant experience in creating wealth for investors. The fund ecosystem, these are the parties who form the segregated control in the fund investment system, which gives us our protection of investment within the fund. The manager here is Faida Investment Bank. The trustee is Comparative Bank of Kenya. Regulator is Capital Markets Authority. Custodian is I&M Bank. And the auditor for the fund is Joroge Kuria and Associates. In looking at the reduction in performance or the improvement in performance of a fund, it's good we also explore the asset allocation by the fund manager. And notably, from this schedule, investment in sovereign bonds is at 56%. In Q1, investment in sovereign bonds. Sovereign bonds is just a term that is similar to a government bond. Either you use the term government bond, a treasury bonds, or sovereign bonds, because sovereign bonds, these are debt instruments that are issued by national governments. So government bonds, treasury bonds, sovereign bonds is one and the same, they mean one and the same thing. The percentage share of allocation of the AUM in this fund has reduced significantly from what we had in Q1 to a 56% in Q2. This may have been arrived in two ways. A lot of the new investments in Q2 either were spread to the other asset classes, diluting the percentage held in sovereign or bonds, or there was actual liquidation of some assets that were held in sovereign bonds and redistributed to the other asset classes. There is active management in these funds in their distribution for diversity to mitigate risks and get alpha returns for the investors, because these funds has an objective of growing investor capital while preserving the same through risk mitigation. Thank you for watching, and see you in our next video, where we shall be comparing closely the two funds, that is Ox Special Fund and the Manza X Special Fund.